So Adam Aaron said that AMC has contacted the NYSE and FINRA about the threshold list, and then the earnings call just dropped. What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. So I guess a few different people, and by a few I mean a handful, had the earnings call drop as soon as Adam Aaron mentioned the threshold securities list, which is a very odd thing to hear. Let me know if this happened to you guys in the comments down below. But in today's video, we have a lot of stuff to cover on AMC, so all I ask you guys to do is watch until the end so you don't have to watch another YouTube video. I don't want to waste anybody's time. We're going to update you on every single thing that there is to go over on AMC, including the chart, as well as GameStop and SPY at the end of the video. So without further ado, please hit the like button if you find value out of the video or just want to help me out. Also hit the subscribe button, get us to 16,000 subscribers. Let's get into it. So here is the latest AMC court case update. The Delaware Supreme Court has rejected an emergency interlocutory appeal that aimed to move the lawsuit to a higher court. Zurn closed the record for any submissions or objections, but again, they are still trying to do whatever they can to delay this case. But this is a good thing to see. This means that Judge Zurn can move forward with taking a full look at the case and not these side piece documents that Zurn has to deal with. AMC short interest has hit an all-time high, at least for what's reported to us, sitting at 30.42%, aka 157 million shares short, and is on the Reg SHO list for 32 days straight currently, and the cost bar average is sitting at 351%. Now, if you guys didn't see my full earnings update video, I posted that yesterday. AMC went positive on earnings, and we're going to talk about that in a little bit. But one thing I thought was weird is APE's short interest. When did shorts cover? Shout out to Dade Murphy on Twitter for tweeting this. He says Fintel showing that APE short interest went from 13.91% short interest 2 days ago to a current 5.08% short interest, while AMC was over 29 2 days ago to a current 10.6%. Again, I'll ask, when did these shorts cover their shares? Now, Fintel is reporting wrong data, or shorts are covering somewhere else that is clearly not reflecting price action, and I stated this in my exit strategy video, my very last one that I uploaded. I said these are the ways to get out of AMC, and I said to watch out for when they start manipulating the short interest that's reported to us. Be very, very careful with this. And they're doing it over here on Fintel. Short interest dropped on APE, according to Fintel, to 5% and AMC to 10%, but at least that's not the case just yet for Ortex. Now, several users are indicating that they've managed to execute an order for AMC shares at a price of $109.89. Now, whether this is true or not, we know that there have been many glitches, bringing AMC share price to over $4,200 a share, which was reported by not just a regular retail trader, but by Bank of America themselves in their 13F filing and a few other banks as well. So these glitches are nothing new, and I wouldn't be surprised if this happened. I also wouldn't be surprised if AMC's first stop on the way to the squeeze was $109. Now, before we get into the chart, short sellers have taken a hit of $53.5 billion mark-to-market losses in July, making over $175 billion in total losses for this year so far. Short sellers are getting absolutely slaughtered. We remember when they were in trouble when they lost $81 billion when the SPY just started to climb, and now they are down $175 billion. And finally, the stock that they are most deeply short in, the thesis just got deleted by them going positive on their earnings. Now, I am holding my shares. I'm holding my calls. I am all for the MOAS. I will hold until this thing goes to zero or until it goes to the price that I want it to go to. Now, we have talked about, if you've been watching my channel, the flash crash that is going to happen, and I still stick to it. This little segment that the chart is trading in is the same exact cycle segment that we have traded in back here before January. Now, a couple things I wanted to point out. On balance volume, many accumulated stock on that earnings play. Okay, the on balance volume is now at the same peak as it was when retail bought in and was holding at $36 a share. So this is a most definite manipulated price. $5 doesn't matter. If it goes lower, does not matter. This is a manipulated price, and until we squeeze, the price is going to bid higher and higher and higher until they can find real shares to cover on. Now, I want to point you to something that I find very odd. Okay, we expected something like this that is about to happen. This flash crash right here, sell off before a major rip. And you can see that there's a little gap fill in here. Okay, right here, there's a little gap fill. And there's also a gap fill down to $3.18. Well, based on the chart, if we do have that sell-off, this could be a dangerous thing to see temporarily, at least, for AMC to have this flash crash a little bit further than we thought before getting that peak once again. AMC ended up flashing down on that same part of the cycle 56%. And if we flash down 56% right to that level, the same way it did back here, it's going to land right on that gap fill that I pointed out over on AMC. That gap fill back here, it's going to fill the first gap to 318 and then that second gap, bringing it down to a little bit under $2.40 before getting that major rip. And I think that's something where they are going to try and scare us, because we saw back when FTX was issuing these fake tokens on AMC, that flash crashed down in February on the token chart but didn't reflect on AMC, flashing it down to $2.38 or so. So never forget, the old glitches may just come to fruition. Not only that, but the past couple of days, there's not enough volume, right? We had an earnings play with 30 million in volume. That's absolutely nothing. AMC needs a lot more volume than that. Volume was too low. The short exempts were too high. There's gap fills. We talked about the cycles. Real quick, Stonko Tracker reporting 0 shares available to borrow. And the short exempts, you can see right here, they're not letting it run. Almost 500,000 up from 362. And they have been just scaling it up and up and up until this time being. They will eventually have to locate those. And we have been on the threshold securities list for quite a bit. But take a look at next week's options chain. Over 1 million put contracts being bet that AMC will sell off, and we have been talking about that flash crash, so be very, very careful here. Now, before we get into GameStop and the SPY, I want to talk about Zip Trader on YouTube. I like this guy. I like his videos, and I'm going to give him a like. Go over to his channel and give him a like. I'm going to play this clip, and if you've already seen it, you can skip about 1.5 minutes from right now to when we get into the GameStop, the SPY, and a couple other things to close out the video. But he talks about Adam Aaron, AMC raising cash, and the problem with this. And for all you Adam Aaron lovers, I hope you see the problem with this.
They're not evaporating their liquidity at an uncontrollable pace, and they have a lot of liquidity. Yet their CEO just a couple days ago reiterated on Twitter and reiterated within the earnings report that they still face massive liquidity challenges, and they need to be able to dilute substantially. Otherwise, it's an existential threat to AMC. But again, unless you're being extremely and overly defensive here, the data just does not suggest that they need to raise any more capital. And it certainly doesn't suggest that they need to do it right now. In fact, based on these numbers, if AMC doesn't increase their profitability at all in Q3, Q4, and then Q1, 2, 3, 4 of next year, they're still going to be able to operate just fine. Because again, they're not losing money quarter over quarter. Okay, but wait, Charlie, what about AMC's debt? Don't they need to dilute as soon as possible so they can pay off all this debt as soon as possible? This argument makes no sense. And we'll get into the dates of rolling over argument later, but the argument doesn't make any sense. Here is the trajectory of AMC's debt. You were at $5.8 billion in 2020, and now you're at $4.8 billion in debt. This previous quarter, AMC has been able to service that remaining debt and report a profit. So logic shows, hey, if they continue to service it and continue to be able to report a profit and continue to expand that profit, you're going to start being able to pay down some of that debt. Now, again, I get it. You're not going to be able to pay down $4.8 billion in debt. With $8 million in profit, $20 million in profit, even $100 million in profit, it's going to take a very, very long time. But why does AMC have to pay that off right now? Why? It makes no sense. Even if you look at the dates that some of these need to be either refinanced or rolled over, you're looking at 2026. If AMC can operate profitably and service the debt at the same time while recovering and trying to actually earn money that they later can put back into paying off the debt or providing more value for shareholders, well, why can't they do that? You see, pre-pandemic, AMC actually had a very, very similar level of debt to what we do now. You're at about $4.8 billion now. You were at about $4.7 billion then. So why? Why is there such a rush to dilute and screw over the long-term loyal shareholders of AMC at this point? Why? Why is there so much of a rush? There is no reason for it fundamentally. The underlying business is finally starting to turn around. So why would they go and stop any sort of run in the underlying stock price at the same point where their business is actually moving in the right direction? Why is Mr. CEO acting so aggressively to make sure that markets know, hey, we're going to do everything we can to dilute because it's an existential threat, even though if you look at the fundamentals we're reporting, some of the best data out there. We have the best report in many, many years. And we're profitable, so we're not evaporating capital anymore, and we have lots of liquidity. But yeah, we need offering now, now, now. This makes absolutely no frickin' sense. I just do not see a case for a liquidity crisis at this point. Many, many good and profitable companies operate with huge levels of debt. I agree that it's not a good thing, but it doesn't make sense to destroy your shareholders unless you absolutely have to. If he's really set on paying off the debt with shareholder capital, he could easily wait 2 years, watch as AMC rebounds and really builds back, and then he can raise the capital at, say, $20 a share instead of $5 a share. But instead, he's fighting his hardest to issue shares at levels that are way lower than the stock has been trading at over the last several years. And that makes no sense to me. The whole justification is some impending doom that isn't anywhere to be seen.
Now guys, before we get into GameStop and the SPY, make sure to pop in the Discord. The link is right under the video. I'm in there on the daily, so you can talk with me on the daily. Plus, we talk stocks all day long, have options trading alerts, and we post gains and post losses in there as well. Also guys, get up to 15 free stocks, each valued up to $2,000 per stock, and a free Tesla or Google stock. So basically a chance at $30,000 for just signing up to Moomoo, using my link, and making a deposit. It takes 2 minutes out of your day, so make sure to go do that. The link is right under the video. Now, I don't want to spend a lot of time on GameStop's chart. We're trading at $20.21, down 2.56%. The on-balance volume is also nearing all-time highs like AMC. I expect it to get this 12% sell-off on the flash crash like AMC, but not as bad. Coming down to this trend line right at $18 even before GameStop does get that major rip, and we're just watching for it. It broke below the support, and now it's heading to that level that we were talking about. Buy at 447.45, down 0.29% on the day. We said it was coming down to 444 yesterday, didn't quite get there. 445.40 instead. I think over the next couple of days, probably by Friday, we come down to 444. It's trying to base and build support at 446.50, but I don't think the SPY is strong enough, especially seeing that there are multiple gap fills to the downside. So just watch those gap fills on the SPY. Plus, we are expecting a little bit of a correction on the SPY, and we could be heading into that right now. I wouldn't be surprised if we fill a gap, get a little bit of a relief bounce, come back down, fill another gap, relief bounce, and then sell off before getting back into a legitimate bull market and finishing that correction. Microsoft to explore digital payments and central bank digital currencies, which is definitely not a good thing to hear. And finally, to close out the video, 67 country leaders have been officially invited to the BRICS summit scheduled for August 22nd to 24th. France's president was not one of them. Overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to hit the like button on your way out, drop a comment down below, share the video. I love you all. Lottery Stocks out.